Financial literacy. From the basics over credit cards up to investing, in this video you learn all about it. Hello and welcome to the Business Class, your YouTube channel, where you learn all about the topic money. Although money and wealth are not everything, you barely get anywhere without in our modern day society. Seemingly everyone nowadays wants to be rich, famous and live a life in wealth, but of course not everyone will manage to do so. However, if you are determined, focused and working hard, you will be able to achieve your goals. So do no longer waste your potential, do no longer wait for your luck to happen from alone, improve yourself every single day and you will soon start to see the fruits of your success. With my videos, I want to provide you with motivation, knowledge and inspiration, so that you can reach your goals as fast as possible and make the best out of your life. If you have general interest in content about topics like make money online, stocks, luxury and lifestyle, subscribe to the channel and press the bell button, to not miss a single video. Also write a comment with your suggestions and wishes, which content you would like to see more often. And now let's start. We know that the earlier you learn the basics of how money works, the more confident and financially successful you will be in later life. It's never too late to start learning, but it's important to start at the beginning. The first step into the world of money begins with education. Banking, budgeting, saving, credit, debt and investing are the pillars that underlie most of the financial decisions we will make in life. This guide is the first step in that process, and it's just right for today. Let's start with what financial literacy is and how it can improve your life. What is financial literacy? Financial literacy is the ability to understand and use a range of financial skills, including personal financial management, budgeting, and investing. It also means understanding specific financial principles and concepts, such as the time value of money, compound interest, debt management, and financial planning. Developing financial literacy helps people avoid making poor financial decisions, gain independence, and achieve financial stability. Key steps to financial literacy include budgeting, understanding spending, paying off debt, and planning for retirement. Knowing how money works, setting and achieving financial goals, recognizing unethical and discriminatory financial practices, and dealing with the financial challenges you face in life will also help you educate yourself on these topics. The importance of financial literacy. Trends in the United States show that Americans' financial literacy is declining. Every few years, the Financial Industry Regulatory Authority, FINRA, conducts the National Financial Capability Survey, a 5-question test that measures consumers' knowledge of interest, compound interest calculations, inflation, diversified investments and bond prices. In the most recent survey, only 34% of test participants answered at least 4 of the 5 questions correctly. Still, making sound financial decisions is more important than ever. Take retirement planning, for example. In the past, many workers relied on retirement plans to fund their retirement, with the financial burden and decisions about retirement funds falling on the companies and governments that sponsored them. Today, few workers receive a pension. Instead, they are offered the option of participating in a 401k plan. In the absence of employer-sponsored options, they also have to actively open an IRA, individual retirement account, or a tax-advantaged retirement account. In addition, people are living longer in retirement. Their Social Security benefits are barely enough for basic living, health and other insurance is complicated. Savings and investment vehicles are more complicated, and the options are endless, including banks, credit unions, brokerage firms and credit card companies. Clearly, financial literacy is necessary to make informed and thoughtful decisions, avoid unnecessary debt, help families make difficult decisions, and earn sufficient income for retirement. The basics of personal finance. Personal finance is where financial literacy is reflected in personal financial decisions. How you manage your money. What savings and investment tools you use. Whether it's buying your own home, helping your family, saving for your children's university education, supporting activities that interest you, or planning for retirement, personal finance is about setting and achieving your financial goals. This includes topics such as banking, budgeting, managing debt and credit, investing and more. Let's look at these basic issues first. Introduction to bank accounts. A bank account is usually the first financial account you open, and it is necessary for major purchases and life events. In this section, I will explain what type of bank account you need and why a bank account is the first step to building a stable financial future. Why you need a bank account. Although most Americans have a bank account, 6% of households in the United States still do not have one. This is because having a bank account is safer than having cash, because it is easier for people to keep money in a bank account and because it is more secure than cash. Assets held in banks are less likely to be stolen, and in the United States they are usually insured by the Federal Deposit Insurance Corporation, FDIC. This means that if all your clients decide to withdraw their money at the same time, you will always have access to cash. Many financial transactions require you to have a bank account to use a debit or credit card, use payment apps like Venmo or PayPal, write a check, use an ATM, buy or rent a home, receive your paycheck from your employer, earn interest on your money. Introduction to credit cards. You're probably familiar with credit cards as the plastic cards that almost everyone carries in their wallet. A credit card is an account that allows you to borrow money from the credit card issuer and pay it back over time. If monthly payments are not made, interest accrues on the remaining balance. Note that some credit cards, called charge cards, require monthly full repayment of the balance, but these are less common. What are the differences between credit cards and debit cards? Here are the differences. Debit cards withdraw money directly from your current account. You can't borrow money with a debit card, so you can't spend more cash than you have in the bank. Debit cards also won't help you build a credit history or credit score. Credit cards allow you to borrow money and not take cash out of your bank account. However, if you don't pay off the borrowed funds in full each month and continue to hold the balance, you will pay interest to the credit card issuer. In fact, as of the first quarter of 2022, Americans had about $840 billion in credit card debt. So be careful not to spend more than you have on hand, as debt can quickly accumulate and snowball over time. On the other hand, using your credit cards wisely and paying your credit card bills on time can help you build a credit history and a good credit rating. Creating a good credit score is not only important for getting a better credit card, but also for getting better interest rates on auto loans, personal loans and mortgages. A little hint for you: if the content of the video is important to you and you want to benefit from it in the future, you can easily save the video to your playlist or click on Watch Later, so that you can watch it again at any time you want. Or, if you don't watch this video as a logged-in member, just save the video as a bookmark in your browser, to always have easy access to it. How to start investing. When you're ready to start investing, learn the basics of where and how to invest. Decide what and how much to invest. Many categories of mutual funds represent the types of securities in which they invest, their investment objectives, and the types of returns they seek. Most employer-sponsored retirement plans invest in mutual funds. What is the stock market? A stock market is a set of markets and exchanges where stocks are bought and sold. The terms stock market and stock exchange are used interchangeably. Although they are called stock markets, other financial securities such as exchange-traded funds, ETFs, corporate bonds and derivatives based on stocks, commodities, currencies and bonds are also traded on stock markets. There are many platforms for trading stocks. Leading stock exchanges in the U.S. include the New York Stock Exchange, NASDAQ and the CBOE Options Exchange. How do you invest? To buy stocks, you need to use the services of a broker. This is a professional person or digital platform whose job it is to process transactions for you. For beginning investors, there are three main categories of brokers. 1. Full-service brokers who manage your investment transactions and provide advice for a fee. 2. Online, discount brokers who make trades and provide advice based on the amount of your investment. Examples are Fidelity, TD Ameritrade and Charles Schwab. 3. Robo-advisors that make trades and select investments for you. Examples include Betterment, Wealthfront, and Schwab Intelligent Portfolios. What should I invest in? There is no right answer that works for everyone. How many securities you buy depends on how much money you have to invest and how much risk you are willing to take to get a higher return. Stocks, also known as shares or equity, are a type of investment that involves partial ownership of the issuing company. Shareholders may own a portion of a company's assets and profits. In essence, it is like owning a small part of the company. Owning stock gives you the right to vote at shareholder meetings, receive dividends arising from company profits, and sell your shares to another person. Stock prices fluctuate throughout the day and depend on a number of factors, including the company's performance, the state of the national and world economy, and the news of the day. Stocks can rise in value, fall in value, or become worthless, so they can be more volatile and risky than many other types of investments. ETFs, exchange-traded funds, consist of a set of securities, such as stocks, often linked to an underlying index, but ETFs can invest in any industry and use different strategies. Think of an ETF as a pie containing many securities. Buying stocks in an ETF means buying a piece of securities in an ETF means buying a piece of the pie. This makes it easy to buy many stocks at once and only buy ETFs. ETFs are similar to mutual funds, but are listed on an exchange and traded overnight. Just like regular stocks, ETFs contain many securities and are therefore considered less risky than investing in individual stocks. ETFs contain many securities, and if some of them fall in value, others may not fall in value or rise in value. Mutual funds. Mutual funds are a type of investment that consists of a portfolio of stocks, bonds, and other securities. Mutual funds provide small or individual investors with access to a diversified, often professionally managed portfolio at a low cost. Many categories of mutual funds represent the types of securities in which they invest, their investment objectives, and the types of returns they seek. Most employer-sponsored retirement plans invest in mutual funds. Investing in mutual fund stocks is different from investing in stocks because mutual funds do not own a single stock, or other security, but many different stocks. Unlike stocks and ETFs, which trade at different prices throughout the day, mutual fund shares redeem only at the end of each trading day and at the price at which the fund's shares are priced at that time. Like ETFs, mutual funds are considered less risky than stocks because they are diversified. They are considered less risky than stocks. Bonds. Bonds are issued by companies, municipalities, states, and sovereign governments to finance projects and operations. When investors buy bonds, they are actually lending money to the bond issuer with the promise of repayment and interest payments. The coupon rate on a bond is the interest rate an investor can receive. Some bonds have a floating interest rate, but traditionally bonds pay investors a fixed interest rate, so bonds are called fixed income instruments. Bond prices are inversely related to interest rates. When interest rates rise, bond prices fall, and vice versa. Bonds have a maturity date, and there is a risk that the issuer will default if the principal is not paid in full to investors. Bonds are given a rating according to which the issuer is most likely to pay you back. Highly rated bonds, known as investment-grade bonds, are considered safer and more stable. Such offerings are linked to listed companies and government agencies that boast a positive outlook. Is it safe to invest in the stock market? Stocks are inherently risky, and you could lose money if the stock price falls. Brokerage accounts are insured by the Securities and Cash Investor Protection Corporation for up to $500,000. However, this insurance applies only if the brokerage firm goes bankrupt and cannot pay its clients back. It does not cover normal investor losses. What are the safest investments? U.S. Treasury securities such as bonds, notes and bills are backed by the U.S. government and are generally considered the safest investments in the world. However, this type of investment typically has low interest rates, and investors face the risk that inflation will reduce the purchasing power of their funds over time. And if one day, you want to build up your own business or you have one already and want it to grow much bigger and faster, always have in mind that starting a successful business and earning money takes time. You need perseverance and a lot of stamina. It's like you growing a small plant right from the seed. You never know how fast it will grow, how tall it will get, and how many fruits you will be able to collect. It is the same with every business. Some work great, some flop, and some could become very successful. But people way too often resign much too early. So follow my advices, try out different methods, and sooner or later, you will find the one that suits you the most, that fits best to your skills and knowledge, and you will have a well-earning business. No matter if you want to make money online, by affiliate marketing, drop shipping, or even stocks, everything is possible. And even though growing a business and making money can sometimes be a lengthy and tedious issue, it's all worth it at the end. Just stay focused to your goals, work smart and hard, spend your time and resources effectively, be persistent, and sooner or later, you will have success. You will reach your goals and earn enough money to live the life you ever dreamed of. I hope this video was helpful for you and I was able to impart knowledge to you, give you new ideas, or simply inspire and motivate you to change your life in a positive way. If so, please leave a like and write me your opinion and content requests in the comments. If you have general interest in content about topics like make money online, stocks, luxury, and lifestyle, subscribe to the channel and press the bell button to not miss a single video. Thank you very much for your interest and especially for your time. And hopefully, we see us in the next business meeting.